You've probably heard of a federal bailout before when it was used in the 2008 financial crisis, where the federal government came and bailed out the big banks and the car companies. They infused cash into these entities by passing legislation to do so and adding to the federal deficit. Well, we are in different times now, and the deficit is soaring into the trillions and trillions of dollars. And I'm not so sure something like that would happen again, especially after the money infused after the COVID-19 pandemic. Now, with all that said, there's something else that banks can do should they get into trouble, and it's called a bail-in, something you've probably never heard about. Let's get into it. Thanks for watching, and please hit the subscribe button, like this video, and share it with your friends to let everyone know about this important information. Now, before I continue, I'm not a financial advisor. I'm not a financial analyst. I'm just doing research on my own to learn more about what's going on. This was sparked by the Fed's large repo operation on Halloween that got me looking into everything as warning bells went off about our economy and the banking system, as they were short on cash and had to take $29 billion in this repo operation to infuse cash. It was an emergency operation into their system to increase liquidity. They claim it was so they could continue to lend money, but I'm not so sure that's really the case. So after the 2008 financial crisis and the government bailed out the auto companies and the big banks, they passed the Dodd Frank Act of 2010. And I've been hearing about something that's contained within this, and it is called a bail-in. And yes, this is something the banks can use. It is legal, and no one is talking about it. And for good reason, because if people start talking about this more and considering it a possibility in the near future, it will cause a massive panic. And I'm not trying to cause a panic here, but I think it's important for people to be informed. And this doesn't really apply to everyone. This mainly applies to people who have more than $250,000 deposited into a single bank. That's who could be potentially negatively impacted by this. And what a bail-in does is if a bank is becoming insolvent and they need a cash influx to try and keep from going under, and after all the federal procedures have failed to try and keep the bank solvent, they can use this bail-in under the Dodd Frank Act. So if you have over $250,000, that is the FDIC insured amount, $250,000. If you have more than that in an account at a bank, they can then seize that amount over $250,000 as a bail-in and convert it into equity shares of the bank, which essentially become useless at that point, because when this is happening, the bank is insolvent and they're using your money to help keep them afloat. The reason this is a concern is because, yes, most people don't have that much in a bank account at a single bank, but if this starts happening, if bail-ins start happening, it can cause panic and cause runs on banks that are in trouble and cause more of these situations to happen and then start a collapse of our financial banking system. So what this does is it uses the bank's debt and converts it into equity to recapitalize a bank. So banks having debt, you're like, what? So a bank's debt is essentially the deposits that are put into it, because that bank will eventually possibly have to pay all of that out at some point. So they have a certain amount of liquidity they maintain to be able to do these payouts. If that starts running short, that's at a time when they might start taking these repos and maybe start using bail-ins to help with things. Now, these bail-ins only get used against unsecured deposits or debt that the bank has. The reason this whole bail-in was created was to shift the burden of saving the banks from the taxpayers and on to the bank's creditors and their shareholders. Something else every bank is required to have under this Dodd Frank Act is called a living will, which outlines how the bank will handle a situation if it becomes insolvent, and outlines the steps they would take, and many include this bail-in option. These living wills have to have a plan in place to keep the banks solvent without government assistance. That is the requirement of this. So that's why the bail-ins are part of this. The only reason I'm talking about this is because of what I saw at the repo market, and my research I was conducting led me to this. And I've been looking, and more economists are starting to talk about this. As of today, things are stable, things seem fine, but things could change at any moment. So it's better to be prepared. Now, I'm no financial advisor. All I can tell you is your money is safe up to $250,000 in deposits at a single bank. So if it were me and I had more than that, which I don't, unfortunately, in a single bank, I would move whatever is over the 250,000 into a different bank just to keep the money safe. That is what I would personally do. I'm not giving any advice here. It's up to you guys to do what you need to do. I've given you the information, so it's up to you. Let me know if you found this helpful. Let me know what you think about all this, what you think about the economy and what's to come, and how this government shutdown that's now the longest in history could affect things going forward. Comment, like, share, spread the word, subscribe to my channel, and I will see you back here for the 411.